Assalamu alaikum guys. Today's lecture is about inventory valuation. Uh, First of all, we will look how inventory is to be valued. What are the accounting standards which actually guide us to value the inventory? So I'm going to share my screen with you guys. So here we are. First of all, we will look into what the accounting standard is. These are known as the rules and procedures and guidelines to record and present the accounting information. Those are known as accounting standards. So as these standards are used internationally, so we would call them international accounting standards. Uh, we will go through many accounting standards throughout our syllabus of this financial accounting subject. But let's first have an introduction of IAS1 and IAS2. IAS1, the name of this accounting standard is presentation of financial statement. IAS stands for International Accounting Standard. The number is 1. The name is presentation of financial statements. This standard shows us that how to present the financial statements. Financial statement, when we say financial statements, it means the statement of profit and loss, statement of financial position, which we have studied in our subject, and the statement of cash flows. These are the three statements which we shall go through in our syllabus area for this subject. Apart from these, there is also statement of changes in equity as well. We'll go through that as well after a bit time. So IAS1, presentation of financial statements, it tells us how to present the financial statements. Currently, that's not our topic. The next standard is IAS2, International Accounting Standard number 2. This is inventory. This standard actually tells us that how to record the inventory, how to value the inventory which we have. First of all, we shall see that we have three types of inventory available. Number one is the raw material. Raw material is that material which we purchase to produce the goods. Then once process is started on the raw material to produce the finished goods, that's known as work in progress. Means there are some material which is being under construction, under process to produce the goods. That's called work in progress. And then finally, when a good is produced, that's called the finished goods. So once we prepare our financial statements, let's say today we have to prepare our statement of financial position, which includes assets, liabilities, and capital. So we have to record in that statement that how much assets we have. And definitely inventory is a current asset. So we have to give a value to our inventory, whether it's raw material in our store, whether it's work in progress in our production department, or whether it's finished goods in our distribution department waiting for dispatch to the customers. We have all these three materials available, and we have to value all these inventory. So IAS2 inventory, this standard says that whatever the inventory is, whether it's raw material, whether it's work in progress, whether it's finished goods, it has to be valued at lower of cost and NRV. So we shall calculate the cost of that inventory, or we might be knowing the cost of that inventory. And then we have to calculate the NRV. NRV stands for net realizable value. We have to value the inventory at the lower of between these two values. Whichever is lower, the inventory is valued at that cost. So first of all, look into cost. What is cost? Cost is the purchase cost plus any capital expenditure. Whatever we incur expenditure on that inventory, which is to be included in the value of that inventory, that's known as capital expenditure. So first of all, let's explain what is the capital expenditure. We have normally two types of expenditure. First one is the capital expenditure. Remember, capital expenditure either results in creation of asset or it is included in the cost of assets. Means either we create an asset by spending something, or we add something into asset. That is known as the capital expenditure. As it is an asset, so it has to be recorded in statement of financial position. Normally, if we have some improvement expenses, enhancement expenses, modification or alteration expenses, or even initial repair to bring the asset into usable condition, these all expenditure are capital expenditure. And capital expenditure are included in the cost of the asset. And the other expenditure we have are the revenue expenditure. Revenue expenditure is simply an expense, and it is recorded in statement of profit and loss. Examples are routine repair and maintenance. So whatever the capital expenditure is, that will be included in the purchase cost. So once we purchase raw material, remember always the cost is lower at that point of time, because if I know that I can sell something at $20, and I will not purchase it above $20. If I purchase it for 25 and I am hopeful that it will be sold at 20, I would definitely not purchase that. But if I purchase that material at $20 per unit and I hopeful that it will be sold above $20, 25 or 30, so definitely I will purchase that. So initially, once we purchase the inventory, the cost is always the lower. Okay, what is NRV? NRV is normally the sale price. Whatever the market value of the product is, that is NRV. That is the net realizable value which we realize once we sell that product. But at some point, at some times, we have to incur something extra cost on that item to get it sold. For example, I purchased three pieces of suit, three pieces of wearing suits. One piece I have purchased for $2,000. Let's say, let's suppose I have purchased it for $2,000. If I will be hoping that I can sell this asset at let's say $3,000. But initially I have purchased it for 2,000. The 2,000 is lower than 3,000, so I will value this suit at $2,000. But what if that suit is damaged and I have to incur at least $1,500 to repair it, to bring it into the same condition where it was before the damage? Then I will be able to sell it for 3,000. So it means if I will incur 1,500 to get a sale price of 3,000, I I will have a net realizable value of 1,500. So NRV, how we can calculate that NRV? That is sales price. Let's say our sale price is 195,000, and the cost to sell means I have to incur 75,000 to earn this 195,000. It means my inventory is my NRV of the inventory is 1,20,000, whereas my cost is 1,50,000. So in this situation, I will definitely value this inventory at NRV because NRV is lower. So remember, always inventory is valued at lower of cost or NRV. Let's take an example. This is the same example. I will start from the scratch. 50,000 kg is in stock and the purchase cost is $500,000. $500,000 is the purchase cost, and I have 50,000 kg in stock. 15,000 kg out of this 50,000 kg damaged and it needs repair. The repairing cost is $5 per kg. I can sell this item for $13 per kg if it is good, if it is not damaged. So I have to restate that how much the inventory is to be valued. So initially, when I purchased this 50,000, its cost was 500,000, means $10 per kg, and the sale price is $13 per kg. Definitely, cost is low. I will value it at 10, and my inventory value is 500,000. But if 15,000 kg is damaged, now I have to check the NRV of these damaged goods. These 15,000 kg needs a repairing cost of 5. Then I will be able to sell it for $13. So let's say if I am able to earn this $13 after incurring this $5 cost, I will save only $8. It means my net realizable value is $8, whereas my cost is 10. Now, the NRV is lower, net realizable value is lower than the cost in this case, in the case of this 15,000 kg. So what I will do, I will reduce this value of inventory of 15,000 kg by $2 because initially it was valued at $10 per kg. Now it has come down to the $8 per kg. I have to reduce my inventory of this 15,000 kg by $2. So I will reduce this value 15,000 into 2 by 30,000. So initially the value of inventory was 500,000, and once I will deduct this 30,000 from my inventory, the net realizable value is 4,70,000. So my restated value of inventory is 4,70,000. So I hope you got this NRV and the cost. Next question is, if there is inflation and we are purchasing raw material again and again, definitely we might be purchasing it every time at a different cost. So if we have to record the inventory at cost and we say that initially the cost is always the lower one and we have to record it at the cost, so which cost is to be taken? Whether this is the first purchase cost or it the second purchase cost or the third, this is what we are going to practice. In this situation, IAS2 has given us the guidance to use some inventory valuation methods. And we'll go through these three valuation methods. First is the FIFO. FIFO stands for first in, first out. Second is the LIFO, last in, first out. Third is the weighted average. And we have two weighted average methods. Number one is cumulative weighted average, and number two is periodic weighted average. So, first of all, let's take an example and then we shall go through using all the methods to solve this example. ABC company had 7,000 kg of material X in inventory on 1st April 2020, which had a value of 35,000. So this is to be considered as opening stock. So our opening stock is 7,000 kg having a total value of $35,000. It means it is $5 per kg. During the month of April 2020, following transactions took place. 5th April, we purchased 10,000 kg of material X at a price of $6 per kg. It means the opening stock was valued at 5, but now the purchases on 5 April is valued at 6. On 10th April, we issued 12,000 kg to production. So once there is an issue, we have to calculate the value of this issue using some method. Either it would be FIFO, LIFO, or weighted average. We always have to calculate the value of issue. Once we calculate the value of issue, we can also calculate value of the remaining balance, that is called closing inventory. On 5th April, we once again purchased 8,000 kg at a price of $9 per kg. Now it has been increased to the 9 from 6. 20th April, we again issued 7,000 kg. Then 25th April, we again purchased 6,000 kg at a price of $10 per kg. So, moving through this example, I can see that how much kg are there in my inventory. Let's say initially we had 7,000 kg, then we purchased 10,000, making it a total of 17,000 kg. We issued 12,000 kg to production, and it means we are left with 5,000 kg. Once again, we purchased 8,000 kg. We have 13,000 now in stock. 7,000 kg were again issued. The 6,000 kg is left, and again we purchased 6,000 kg. It means at the end of the April, we have 12,000 kg material in stock. So we have to calculate the value of this 12,000 kg, number one, and the value of 19,000 kg material issued to production. 12,000 on 10th April and 7,000 on 20th April. So we have to calculate the value of this material issued to production and the value of the material which is in stock. So requirement, calculate the value of closing inventory, which is 12,000 kg on FIFO method, LIFO method. FIFO means first in, first out. LIFO means last in, first out. Means if we use the FIFO method, we will issue the material which we purchased first, and definitely in our closing inventory we'll be having the material which we have purchased latest. LIFO method, last in first out, will issue that material first which has been purchased last. Latest purchase will be issued first, and definitely in our closing stock we'll be having the oldest material which we purchased previously. And then we'll use the cumulative weighted average method and the periodic weighted average method. Again, we have to calculate the material issued to production. This was the value of closing inventory and the material issued to production using all these methods. So let's go first of all through FIFO. Remember, we have to calculate. Let me delete these values first so that we might be able to calculate these values at our own. I will delete all the values so that once we calculate this, you might know that how it is calculated. I will remove these lines as well and will bring back accordingly. Okay. Yeah, we're good to go. I will continue according to the example. First of all, I have 7,000 kg in stock. The value of this 7,000 kg is $35,000. So I will use this tabular approach. First is the date column. Second is the receipt or purchase column. Third is the issues or sales column. And last one is the balance. And I have further sub columns in receipts, issues, and balance. These are kg, cost per kg, and total cost. If I will work through this tabular approach, it will be very easy for me to calculate the value of the issues and the value of the closing stock as well at the end of the month. So on 1st April, I haven't purchased anything. I haven't issued anything. What I have is 7,000 kg in stock. The value of this 7,000 is 35,000. And once I will divide this sum 35,000 to 7,000, I will get an answer of $5 per kg. So I have recorded my opening stock. Moving to the example, on 5th April, I purchased 10,000 kg at $6 per kg. So I have purchased 10,000. I will record in the purchases at $6. So my total value would be 10,000 multiplied by 6. That is 60,000. So I will also update my balance as well. That I have purchased 10,000 and the value of this 10,000 is $6 per kg, having a total value of 60,000. So I have recorded my purchase of the 5th April. Moving further to the example, on 10th April, I issued 12,000 kg. No, 10th April, I have to issue 10,000 kg out of this 17,000. So which 10,000 is to be issued? The method which I am going to use is FIFO, first in, first out. The method is, remember, method is FIFO, first in, first out. The first material in was opening stock. So I will issue this material first. So I will issue this 7,000. This 7,000 has a value of 5. I have to further issue a 5,000 because I have to issue total of 12,000. Now this 5,000 will be issued from this 10,000. First in, first out. This 7,000 has been finished. I will put a line on it that I have issued this material. I will also issue 5,000 from this 10,000. So, and the value of this 10,000 is $6, making a total of 30,000. I will also put a line on this 10,000 because I am only left with 5,000 kg at the moment, whose value is 6, because this material which I purchased on 5th April. I have issued 5,000 out of it. Now I have remaining balance of 5,000, which is valued at 6. This is my updated current balance till 10th April 2020. Okay, moving forward with the example, next on 15th April, I purchased 8,000 kg of material X at a price of $9 per kg. Means I will include this into the purchases. So how much material purchased? 8,000 kg. So I will record it in the purchases 8,000 at 9. I will multiply this value to calculate a total figure of $72,000. I will also update my balance 8,000 recorded in the balance at 9, having a total value of 72,000. So now I have two types of material in my stock: 5,000 kg purchased at 6, 8,000 kg purchased at 9. This 5,000 was purchased first, and I will issue this 5,000 material if I have to. Next, on 20th April, I have to issue 7,000 kg to production. Okay, 7,000 kg I have to issue on 20th April. I will issue this 5,000 first. This is having the value of 6. So it will be having a total value of 30,000. I will put a line on this because I have issued this material. And I have to issue a total of 7,000 kg. I have issued 5,000. I will issue another 2,000. And I will be issuing this 2,000 from this 8,000. So this 8,000 has a value of 9. So I will issue 2,000 with 9, having a total value of $18,000. I'll put once again a line on this 8,000 because I have issued 2,000 from this material. My remaining material is 6,000 kg, having a value of 9. So 20th April is done. Moving forward to 25th April, I have purchased 6,000 kg once again at a price of 10. So I will record this purchase 6,000, value is the 10. I will calculate the total value by multiplying these two figures, and I will also update my balance with 10. So now I have this 12,000 kg in stock. The total value of this 12,000 kg is $114,000, making first 6,000 was valued at 9, making a total of $54,000. The second 6,000, which I just purchased recently on the 25th April, is valued at $10, making a total value of 60,000. So you can see I have calculated the value of closing inventory using FIFO method, that is $114,000, and the value of issues. I have issued this 19,000 kg. The value of this issue is $113,000. So I will add this, and this will become $113,000. Okay. Moving to the same example to LIFO method, application of LIFO method, applying this LIFO. Okay, LIFO means last in, first out. Let me delete the figures initially so that we can calculate, we can know that how these figures are calculated. I will delete this value and then again will calculate using the method which we have already described, or the method using the LIFO method. Yeah, we are good to go. Also, let me put these lines on a side. I will bring these lines again when I need them. Bring them back out. Okay, let's go through the example once again. First of all, I have 7,000 kg material in stock. I will update my stock. That's 7,000 kg valued at $35,000, making cost per kg of $5. Then on 5th April, I have purchased 10,000 kg for $6. So I will write into the purchase column 10,000 valued at 6. I will also update my balance with this material. So now I have two materials in stock: 10,000, which is purchased recently, latest purchase valued at 6, and the old purchase, which was my part of opening stock, 7,000 valued at $5 per kg. Now I have to issue material 10th April. I have to issue 12,000 kg material to production on 10th April. So I am going to issue this 12,000. The method is LIFO, last in, first out. LIFO stands for last in, First out means I will out or issue the material which has been received recently, which is received last, and that is this 10,000. So first I will issue this 10,000 kg. The value of the 10,006. I will put a line on this 10,000 because it has been issued. And the next 2,000 I will issue this next 2,000 from my opening stock, which have the value of $5 per kg. I will put a line on this as well because now I have a balance of 5,000 kg valued at 5, because this 5,000 kg is left from the opening stock. I have issued 2,000 of the out of the opening stock. So remember, this method is last in, first out. So last in material was this. I have issued this material first and then the remaining balance from the previous what I have. So now I have 5,000 kg in balance. The value of this 5,000 is $5 per kg. Then on 15th April, I have made another purchase of 8,000 kg valued at 9. So I will record this in my purchase. Also, I will update my balance. Now I have two types of material available in my stock. One is 8,000 kg purchased at 9. This is my latest purchase. If I have to issue it now, I will issue this 8,000 first. Okay, next I have issued 7,000 kg on 20th April. Okay, on 20th April, I will issue 7,000 kg. Definitely, this is going to be issued from this 8,000. It has a value of 9. And my total issue value is 63,000. I will cut this because I have now 1,000 kg in stock from this 8,000 value at 9. But I already have 5,000 kg in stock whose value is $5. So I'll put a line on that as well because I have restated my balance below. So now I have this 6,000 kg in stock, 5,000 valued at 5, which was part of opening stock, and 1,000 kg which I have purchased recently. Now, next on 25th April, I have again purchased 6,000 kg. I will record this in my purchases valued at 10. I will also update my balance with this 6,000 kg valued at 10. Now my total value of closing stock. This is my closing stock 12,000 kg, and the total value of this 12,000 is $94,000. Okay, you got it? This is the value of closing stock using LIFO method. You can see we have a lower value using LIFO method because it is inflation, and we have left in our stock the material which we purchased initially, which were then cheaper at that time, and that's why our closing stock will have a lower value. But on the other hand, our issue will have a higher value because we are always issuing the latest material which we have purchased, and due to inflation, that material is costly, increasing, thus increasing the value of materials issued to production. So I hope you understood this method as well. Moving forward with the same examples to cumulative weighted average method. Let me delete the figure once again so that we can calculate it on the go to get an understanding that how these figures are calculated. Okay. First of all, I have 7,000 kg in stock. So I will definitely record this 7,000 kg. And the total value of the 7,000 is 35,000, producing a value of 5,000. Do not look on these figures. These are having some formulas, and we shall see that how these are calculated. So I have recorded my purchases on 5th April. I have recorded my opening stock on 5th April. I have purchased 10,000 kg at $6. I will also record this. Sorry, how much? That is 12,000. I have purchased 10,000 kg at $6. So I will record this 10,000 Value is 6. I will update my balance as well. Value is at 6. Now, in weighted average method, remember to calculate a new weighted average cost per unit after every purchase. Whenever we make purchase, we have to calculate a new value, a new cost per kg. And whatever that cost per kg is, we will issue material on this cost per kg, whatever we have calculated using this formula. So how we will calculate the weighted average cost? We will calculate the total cost of material in our inventory, and we will divide it by the total kgs of material in inventory. You see, we had 7,000 kg in inventory having a cost of 35,000. Then we purchased 10,000 having a cost of 60,000. We will add these costs making a total of 95,000. We'll add these kgs making a total of 17,000. Then we shall divide this 95,000 by 70,000 and we got a cost per kg of 5.59. This is an weighted average cost. It's not average, it's different from average. Average, if we calculate the average of these two, it becomes 5 plus 6 divided by 2, that becomes 5.5. This will be wrong. We have to calculate weighted average by taking into account the whole weightage of the material, by adding the total cost and then adding the total kgs and then dividing these two. Now we will issue material at this 5.59 kg. So next we have issued 12,000 kg to production. I will definitely issue this at this value 5.59. I will simply put the reference of this over here. I will get a value of 67059. Now I will deduct this 12,000 out of this 17,000 because I have issued this. I will get a remaining balance of 5,000, and definitely this value is valued at this inventory is valued at 5.59, making a total of 27,941. This is my updated balance. Now on next, these are my issues of 10th April. On 15th April, what I have done on 15th April, I have purchased again 8,000 at $9 per kg. So 8,000 kg at $9 per kg. I will update my balance as well. 8,000 at $9 per kg, making a total of this multiplied by, sorry, not equal, multiplied by 9. 8,000 multiplied by 9, 72,000. Now, once again, as I have made a purchase, I will calculate new cost per kg in the same manner. I will add these costs, I will add these kgs, and then I will divide this. So once I add these costs, it becomes 99,941, and I have 13,000 kg in stock. I will divide this value with 19,000, making a cost per kg of $7.69. I will issue next material at this 7.69. On 20th April, once again, I have to make an issue of 7,000 kg. So I will issue this 7,000 kg to production at a value of 7.69. So I will deduct this 53,814 from the cost. Also, I will deduct 7,000 kg material from the inventory, and I will have a balance of 6,000 kg. The value of this balance is 46,127. Once again, I am going to make a purchase on 25th April. I have purchased 6,000 kg at a price of 10. So I will record it in the purchase column, valued at 10. I will also update my balance valued at 10. By now, you see, I will get a total value of closing stock of 106,127 of this 12,000 kg, and I will get an issue value of 120,876. You can note that in weighted average, we got almost a central value from the FIFO and LIFO. In FIFO, we had a closing stock of 114,000. In LIFO, we got it 94, whereas in weighted average, we got it 106,000. Same is the case with issue. In FIFO, we had a value of material issued to production 130,000. In LIFO, it was 1,33,000, and weighted average, it is 120,000, more than FIFO, but less than LIFO. So this is cumulative weighted average. The key point in this method is you have to calculate a new purchase cost, a new cost per kg after every purchase, and then issue next material at that purchase. The same way we will calculate the value of the closing inventory. Now next, moving forward to periodic weighted average. Periodic weighted average, as it is known by its name, it we calculate a cost per kg for the whole period. Once we calculate this cost per kg, we will issue the material at the same cost. How we shall calculate this? You can see we will add value of opening inventory plus value of all purchases, means 35,000 is the value of opening inventory and 1,92,000 is value of all the purchases. So I will add these figures. I will divide the kgs of opening stock plus kgs of production, and I will find a cost per unit, which is 7.32. You can see in the formula, I have added the opening stock plus, you can see I have added this opening stock plus all the material, all the values of the material. That's 60,000, 72,000, and 60,000. And then I have divided it by 7,000 plus 10,000 plus 8,000 plus 6,000. I will get a value of 7.32. Now I will issue any material, I will value that issue at 7.32. I will also value the remaining 12,000 kg as 7.32. This is very simple. We just calculate one cost per kg, which is to be used to value all the material. That cost per kg is calculated at the end of the period when we have made all the purchases. We have to add the value of opening inventory plus all the purchases, and we have to divide it by the kgs of opening inventory and all the purchases. We'll get a cost per kg. Now we'll value the issues with this cost per kg, and we shall value the closing inventory with this cost per kg. So this was about inventory valuation methods. Remember, we have to study the LIFO, but LIFO is no more permitted by the accounting standard to use in practice. In practice, LIFO is not permitted, whereas FIFO and weighted average are the legal method which we can use. But for the exam point of view, we have to go through all these methods to compare the values between different methods. So this was our today's lecture. I hope you might have got this. If you have any query, please feel free to ask me. Take best care of you. Goodbye. Assalamu alaikum.